All right. Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be going through our live rates, and then we're going to talk about down payment assistance loans. So give us just a minute here to go live on all the different platforms. We got the chat up on the screen there. Feel free to drop a comment there in the chat. I see some comments already coming in. We definitely appreciate it. Hope everybody has been having a great morning so far. And it looks like we're live on all the different platforms, so we'll go ahead and get it started. We'll take the chat off the screen for now, but go ahead and keep dropping comments in the chat. You can also drop any questions you have in the chat as we go through the presentation here today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. And today's loan type is going to be down payment assistance programs. Definitely something that a lot of loan officers run into and talk about, but there's also a lot of misconceptions about down payment assistance programs as well. So Jose will do a deep dive for us into that here shortly. But before we get into that, let's go ahead and do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and see what the rates are looking like today.
All right. So the live rate tool is working here. So we'll look at all the rates at once across all the programs, make it pretty quick. We will look at a scenario that's going to set up a 500,000 purchase, a 400,000 loan amount, which corresponds to 80% loan, 20% down payment. We're going to set everything to a 760 estimated FICO credit score and an estimated 40% debt to income ratio here for all our examples. So this will show the general rates and the APR for today. It is June 4th, just after 11 a.m. Eastern, so all our standard programs are live here. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. Let me go ahead and share my screen. And we'll see the live rates for today. Make it big. All right, so first up for most of our customers, the first option to look at for a primary home is a 30-year fixed conventional program. Most standard program here. Comes in today, 6.624 rate. Final APR, 6.953, so just under 7, which is great. We were over 7 for a bit there. And thankfully now we're moving back down, which is what we love to see. Now, if for any reason our customer doesn't qualify for conventional, typically the next option we want to compare is an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio. So the FHA comes in today at 5.75, and the final APR with all of the upfront and yearly mortgage insurance, 6.736. So if our customer qualifies for both, FHA could be a touch cheaper in some examples. And if our customer needs to use it, definitely a great option. Moving along here to our other options, our VA options, only for our eligible vets and active service members. If you are great programs here, rates as low as 5.875 today. Final APR comes in at 6.195. And notice this is a great option. It blows all the other options out of the water. So for all of our vets out there, great program. The APR is much less than all the other ones. And on our second row here, our last conventional government option is our government USDA program. USDA is only for properties that are in USDA eligible areas, typically rural areas. If you are looking in those areas and you do qualify for the program, it's pretty great. Rates as low as 5.875 today. And the final APR with all of the fees comes in at 6.592. So notice that's below FHA, which is what we may compare to for our customers looking in those areas, and also below conventional. So for those looking in the USDA areas, definitely that's the right program to use. Now, if our customer, for any reason, doesn't qualify for any of the standard conventional government options, many other banks or lenders have to deny that customer, but that's where we love to present our thousands of other options. First up, our 30-year fixed non-QM alt-doc option for a primary home. Typically, this would be a bank statement or similar. We have all kinds of different options. Yesterday, we went over asset-related options, 1099 options we have, P&L options, all kinds of different ways we can set up the income. Typically, the lowest options here will be a bank statement or similar, 6.99 rate today, final APR 7.322. Very comparable to conventional for our customers that may not qualify for conventional and need to use those alternate docs. amazing rates here within half a point. And moving on to our investors, 30-year fixed non-QM alt doc for investment properties. So again, bank statement or similar, comes in at 7.5 rate today, final APR 7.806. And we'll compare that to our other investment options down here. Next up is our conventional option. We do have conventional investment options, but no government programs, no USDA options, no VA options, no FHA options. So we do have conventional though. 30-year fixed for conventional for an investment property is going to be 7.375 rate. Final APR 7.726. So it's down a touch, a little bit better than a bank statement option. But always recommend our customers to check out our favorite programs, the DSCR. So DSCR stands for debt service coverage ratio, where we don't use any employment or income information. We simply use the estimated rent from the rental property to determine a DSCR ratio. The estimated rents can cover the expenses, aka the property cash flows. That's a ratio of 1 or higher. These examples use a ratio of 1.5 so we can see the best options. Rates come in today, 7.25 rate, final APR 7.587, which is better than conventional, absolutely amazing, with a 3-year prepay. And to sweeten the deal, we can add a 5-year prepay for some programs. Rates come in as low as 7% for this option. Final APR 7.316, which really blows conventional away, even with conventional dropping last couple days. And the final DSCR option, there are options for no prepayment penalty, a little bit more expensive here. So 7.875 rate, final APR comes in at 8.231. Notice that's a touch higher than conventional. So usually recommend our customers add a prepayment penalty to take advantage of the better rate options. And another couple cool programs here, our 30-year fixed second mortgage for a primary home. A lot of customers out there want to get cash out, but don't want to have the higher rates of today. So we can get a second mortgage, which would allow us to get cash out and keep the low rate first mortgage in place and still get some cash out. Rates as low as 9.625 today, APR of 10.081. And the final DSCR option, a cool version, a 40-year amortization option for our customers, our investors that want to maximize the cash flow. That will lower the payment, obviously, so maximize the cash flow there with a 3-year prepay. This comes in at 7.75, final APR 8.058. So just a little bit higher than a conventional option here to do 40-year amortization. So great options here. Let's get into Jose's example for today. Which is going to be our unique down payment assistance options for primary homes. Obviously, this has nothing to do with investors. Investors do not qualify for any down payment assistance. This is going to be strictly for our primary homes. A lot of people think they must be a first-time buyer or qualify under a certain income, but Jose is going to explain the exact versions of what he's going to propose here and how our customers can qualify. So Jose, let's check out these examples.
Give me a second here because I am frozen. Give me a minute.
You're not frozen to us.
Okay, yeah, but my screen is frozen here, so I'm not able to click around yet and share. Give me a second. I was actually pulling up the last quote, which was the USDA. So let's talk a little bit about the down payment assistance while the screen comes up. We just recently had this training and we broke it down in the more localized down payment assistance and the national down payment assistance type. And hold on, my screen came up here. So let me just click my preview and then I can move on over. Okay, so what we're looking at here at the mortgage calculator is more the the national down payment assistance, because the localized down payment assistance puts different restrictions that we as a national lender really have issues with trying to meet all the different requirements, since we do business in 50 states and keep our operation uniform across all 50 states. So the national option is much easier to work on the logistics as well. right? And also, the national option does not have any income restrictions, nor does it have a first-time home buyer requirement either. So we find that with the national option, we can actually service more borrower needs that have a down payment assistance requirement. So our down payment assistance options are offered in three different categories. You have a forgivable, actually, yeah, four different categories because of different amounts, but we have a forgivable option that's offered in 3.5% of the sales price and 5%. 3.5% of the sales price, too. We have a repayable, which is offered in 3.5% of the sales price and 5% of the sales price. And then we have closing cost assistance in 3%, 4%, and 5% of the sales price. The main thing to note is that the down payment assistance option allows the down payment assistance to cover the down payment and any additional funds, like with the 5% option, for example, can go to cover closing costs, both in the repayable option, which goes up to 5%. So whereas the closing costs option is only for closing costs, and the borrower still has a 3.5%, if using FHA, 3.5% minimum contribution to funds, which can come from other sources like gifts and stuff, but cannot come from the closing cost assistance. So remember, the down payment assistance allows the application of funds to the down payment and or closing costs, whereas closing cost assistance is for closing costs only. So let me share the options that I have with you today. And also, obviously, these are all for purchases only. No refis applicable for any of these assistance type loans. So our first option is the 3.5% forgivable down payment assistance, and I put 100% CLTV because it is a first mortgage, which is the FHA first mortgage, and then it is a second mortgage for 3.5% of the sales price. The beautiful thing about the forgivable option is that it is forgiven after 60 payments if the borrower is current on the first mortgage. However, what you should note is that the payment or the interest rate on the forgivable option first mortgage is higher than the interest rate on the repayable option first mortgage. So here we're looking at 8.75 as your lowest cost option at a cost of 1.625 points. And this is lender paid option here with this pricing so that everybody's aware. And 7.75% is our lowest rate option at a cost of 2.5 points. So it is a little bit higher, as you will see on the forgivable option. And now when I show you the repayable option, you can visualize what I'm talking about here, because now the repayable option, same 3.5% down payment assistance, but now it is a second mortgage with a 30-year amortization at a 9.99% interest rate with a balloon after 10 years. That means after 120 payments, the balance is due. Now, this is a small loan, right? In this case, 3.5% is $17,500. So it's not really going to be that high of a payment, 100 and something dollars. But what is the difference? Well, first of all, 7.75% here costs us half a point, whereas 7.75% here costs us 2.5 points, right? So you're either looking at the difference of $2,000 of your, or 2% of your 3.5% DPA being eaten up by this extra 2%, or you say, no, I'm going to come down here, minimize the outlay, which is 0.875, but now you're looking at a difference in payment from $35.17 to $38.62. So that's pretty substantial there, right? $340, $350, which is a bit higher than the repayable second mortgage, which is why a borrower would opt for that option if they have the money or if they want to figure that it's going to be repayable. Let's put it that way, because in both cases they're getting the money. In one case they're paying it back, in the other case they're not, but it's quite a bit of a difference in the payment. So again, refresh your memory. This one here, 7.75, but you can buy down all the way to 6.875, which is quite a bit more than the other option. So now we have, I was mentioning about the difference in down payment assistance, allowing the excess funds to be applied to the closing costs, which is another reason why you would go for the repayable option, because the forgivable option does not have a 5% down option. Only the repayable option and the closing cost assistance has a 5% assistance option. In this case, you have 3.5% that you can apply to the down payment and 1.5% that you could apply to the closing costs. And good rates still here. Cost increases by 0.625. So to get the extra 3.5%, or the extra 1.5% in assistance, it costs you an extra 0.625. So you're really getting 0.875 in extra assistance with this option net. And so it is CLTV of 101.5%. And again, second mortgage. So, but good option, 7.75. Lowest cost option at 1.125, and you can buy that down to 7.125 at a cost of 2.375. That extra 7.125 snuck in there. Actually, we got a typo there, folks. So now we have our closing cost assistance. Now, why would you do closing cost assistance? Well, because maybe all you have money for is for the 3.5% down payment. Maybe you negotiated a little bit of seller credit, but you're still short some money, and you're trying to figure out how can you bridge the gap. Maybe you have a great realtor and they said, sure, I'm going to give you a little bit of money, realtor credit, and I also negotiated some seller credit for you, but you're still short because the insurance is really expensive and whatever else may be the issue. You're $3,000-$4,000 short. Maybe it's a low dollar amount loan or low purchase price, so the percentage amounts really aren't that large in dollar amounts. So you need an extra 3% or $3,600. Well, this is the great way to do it, as you can see now, because now 7.75 is at par, right? The other way, we're looking at 7.75 costing some. Now we're at par, so now we get even more savings, and you can buy that down all the way to 6.75, which is very good rates, and still get 3% of the purchase price in closing cost assistance. So this is definitely the way to bridge the gap and have that transaction where the borrower only has 3.5% for their down payment. And again, remember, we have different ways to get the extra money, but sometimes you can only go so far, and this will allow you to bridge the gap, because it's pretty tough to negotiate a 6% seller contribution in most markets, but maybe you can get 3% and get the other 3% from here, which is a great option. So now we have a 4% closing cost assistance, right? Again, repayable. Rate does increase a little bit to cost. So now we're back up to half a point in cost, 7.75, our lowest cost option. You can buy that down to 6.875 for our 4% of the sales price closing cost assistance. And like they say in those Ronco commercials, right? But wait, there's more. Here we have 5% now, again, in the market, a really tight market now here, right? It's hard to get any seller contribution. Seller says, nope, you're lucky I'm even going with an FHA offer. There's some preconceived notions out there, unfortunately. But here we are. You're going to get the contract. So how, again, do you bridge the gap? Seller doesn't want to give any contribution. Realtor gave some contribution, but you're still short Well, here's the option: 5% of the sales price in closing cost contribution. You could, depending on the sales price, you could fund the closing with less than this. If you're looking at a $500,000 sales price, certainly your closing costs aren't going to be more than $15,000-$20,000 at most, even with super expensive insurance and taxes increasing the cost of your monthly escrows. But this is the option right here: 5%, 7.75, again, lowest cost option at 1.125, and you can buy this one down to 7.125. And last but not least, you all didn't know about this one, but this is an amazing one. This is USDA 100%. Remember, on USDA, combined with 3.5% forgivable DPA. Now, they only offer this option, the forgivable option, to combine with USDA loans. So you are looking at 7.75% as your lowest cost option and 7.5% as your lowest rate option. So here you'd be looking at 100% financing from USDA, 3.5% that you're going to use for your closing costs, because remember the down payment assistance option, you can apply it to closing costs because it's already 100% financing in USDA, and then hopefully get a little seller contribution and maybe a little realtor credit combination there to do a true cashless transaction. Now, the borrower still may be required some reserves depending on your automated underwriting findings for USDA, but it would be definitely possible to do it as a cashless transaction in terms of down payment and closing costs. So look at the down payment assistance forgivable option for DPA. So definitely look to the mortgage calculator, not just for all your non-QM options, but for your down payment assistance options, as well as all of our outside the box solutions to our borrower needs.
All right. Thank you, Jose. Let's see here. We'll check if we have any questions to get into. Looks like we do have a question here. We can pull it up on the screen. The question is, what about the Florida Hometown Heroes program?
That is more a local type program. That's a state program. So that is not one that we as lenders participate in. But it's very similar. It's going to combine a community second with different loan types. You have the Home Possible and Home Ready, 3% down options that are affordable, quote unquote, affordable loan options that are income restrictions depending on the area median income that can be combined with a community second. And then you have 3% down first time home buyer option loans that can also be combined with a community second. And we do have some community second options, so you could reach out to us that we can combine with a couple of our 3% down loan options as well.
All right. Okay, I don't see any other questions, so I think we can go ahead and wrap it up then. Definitely great info here today. And remember, we do this at 11 a.m. Eastern every morning, every weekday, where we go through the live rates and then do a deep dive into different loan topics. We'll be back tomorrow with a new loan type to go over. We appreciate everybody tuning in, and we'll see you tomorrow, 11 a.m. Eastern, for the next episode.